If you are considering moving to a new state, it is important to thoroughly research the total cost of living in that state before making any final decisions. This should include not just the cost of housing and necessities, but also the impact of state and local taxes on middle-class families. Keep in mind that living in a state with lower taxes, or even no income tax, may be more affordable for your family. Ordinary American family faces a wide range of state taxes, and depending on your family's tax position, the cost of living in a high or low tax state can be thousands of dollars annually. This video reviewed the estimated total income, sales, and property tax burden in each state to help you evaluate the expected tax impact on average Americans. Here are the most 10 tax-friendly states for middle-class families. Be sure to watch to the end of this video for most state tax-friendly state. Number 10. Delaware. In Delaware, there's no sales tax income. You can shop in Delaware without paying a single penny of sales tax on your purchases. When it comes to property taxes, Delaware has the 9th lowest median property tax rate in the nation. As a result, the tax on a $100,000 is estimated to be just $533 per year. Although income tax is relatively high, ranging 2.2% on income of $2,000 to $5,000, and can be high as 6.6% on income above $60,000. Number 9. California. You might be shocked California is on the list of tax-friendly states for middle-class families. Because if you're a rich person, California taxes will cut deep into your earnings. But for other people, the Golden State's tax hit isn't really all that bad. California has the highest top income tax rate in the U.S. at 13.3%, but only a small portion of its residents actually pay that amount. California actually has an extremely progressive income tax structure, with 10 separate tax rates. Only a middle-class family's income was subject to the state's 6% tax bracket, and the vast majority of their income was taxed at rates of 1%, 2%, or 4%, which is not bad at all. Silicon Valley and certain other parts of the state have extremely high property taxes, but the median property tax rate for the entire state is lower than average. Californians may pay more in certain taxes than citizens of other states, such as the sales tax. The highest state sales tax in the country is the 7.25% rate in California. Local sales taxes, which can be up to 2.5%, but according to Tax Foundation, the average combined state and local rate is 8.82%, which is high. Number 8. Arizona. In Arizona, there's low income tax rate. State income tax range can be 2.55% to 2.98% on income up to $28,653 for single filers, and up to $57,305 for joint filers. It is expected to be an even lower flat rate of 2.5% in 2023. Low property taxes are advantageous for Arizonans as well. A $100,000 home in the state is predicted to have a typical property tax of about $508, which ranks as the 6th lowest median property tax in the nation. The state does have a higher than average sales tax. State sales taxes of 5.6% are the first part. However, several municipalities in addition to all 15 counties impose additional taxes. As a result, the average total state and local sales tax rate is 8.37%. ranking it as the 11th highest in the nation. Number 7. Washington. Washington makes this list is because it doesn't have an income tax. Without that tax break, the evergreen state certainly wouldn't be considered one of the most taxpayer-friendly states in the nation. In Washington, the sales tax is quite high. The state's 6.5% sales tax is significantly higher than the national average. Additionally, Washington has the 4th highest average combined state and local sales tax rate in the nation, according to the Tax Foundation, at 9.29%. Property taxes in Washington are more modest. For a $100,000 home, the median property tax bill in the state will be about $836 per year. Number 6. Alaska. Alaska is one of the states that doesn't tax anyone's income, like Washington does. If you aren't subject to state income tax on your earnings and other frequent sources of income, your overall state tax burden will undoubtedly be modest. The absence of an income tax is one factor in the last frontier's low tax burden, but there are other factors as well. There is no state sales tax in Alaska. Just keep in mind that there could be local sales taxes of up to 7.5% if you're traveling to Alaska. However, the average statewide local sales tax is only 1.76%. according to the Tax Foundation. In Alaska, property taxes are a little on the high side. A couple would pay an estimated $1,171 in property taxes per year if they bought a $100,000 house in the state, which is higher than the national average. Number 5. North Dakota. Income tax rates in North Dakota are relatively minuscule. State income tax range from 1.1% income up to $41,775 for singles filers to $69,700 for joint filers, and 2.9% on income over $458,350. Sales taxes in North Dakota are below average. The state rate is modest of 5%. Local governments can add as much as 3.5%. However, according to the Tax Foundation, the average combined state and local sales tax rate is 6.96%. North Dakota has a reasonable property taxes. A $100,000 home is estimated to have $949 worth of taxes every year. That is just a little bit less than the typical national property tax for a residence of that price. Number 4. Tennessee. There's no income tax in Tennessee. Property taxes in Tennessee are affordable too. Middle-class families can expect to pay only about $1,120 per year for a $200,000 home. That's well below the national average. Tennessee sales tax is very high. It starts with a 7% state rate, plus 2.75% on part of the price from $1,600 to $3,200 of single items. But then local governments can be up to 2.75% more in taxes on each sale. At 9.54%, Tennessee's average combined state and local sales tax rate is the second highest in the nation. Number 3. Florida. Another state without no income tax is Florida. As a result, middle-class families and everyone else who can establish residency in Florida pay less overall in state and local taxes. However, other taxes in the Sunshine State are just average when compared to other locations. Property taxes in Florida are comparatively close to the national average. Middle-class families' estimated yearly property tax expense for a $100,000 home in Florida is $804. The average combined state and local sales tax rate in Florida is 7.01%. According to the Tax Foundation, that's based on a 6% state tax rate, and local rates can be as high as 2%. Number 2. Nevada. The no-income tax in Nevada is a favorite among middle-class families. The Silver State citizens also enjoy other tax benefits. Additionally, Nevada's median property tax rate is the third lowest in the nation. Therefore, middle-class families would only have to pay about $484 in property taxes a year if they purchased a $100,000 home in the state. However, Nevada's sales taxes aren't really that cheap. The state sales tax rate is 6.85%, which is quite high. The average combined state and local sales tax rate is 8.23%, which is the 13th highest in the nation when local taxes are added. Number 1. Wyoming. In Wyoming, there is no income tax, similar to a few other states. Wyoming's cheap property and sales taxes are what set it apart from other states. There is a low 4% state sales tax. Local sales tax are permitted to add up to 1.8% more, which is not a lot. According to the Tax Foundation, the state's average local sales tax rate is 8th lowest in the nation. The property tax in Wyoming is low. Middle-class families of $200,000 home in Wyoming expected to pay about $1,090 per year. I hope you like this tax-friendly states for middle-class families. Don't forget to like and subscribe for more upcoming videos like this.